Eddie Ghabour with me this morning. Okay, Eddie, you're expecting what? A 3 to 5% pullback for stocks by the end of this month, and then a strong year-end rally. Make your case.
Stuart, as you know, we've been very bullish here, but right now we think short-term, the risk-reward is not great from a short-term standpoint. And three main things that stick out to us is we're seeing a series of higher highs in the VIX, which tells us we're probably going to have some days like Friday this month with VIX into the 20s. The dollar last week also looked like it bottomed. That could be a potential headwind short-term. And then the 10-year, interestingly enough, got under 4% yesterday. And our team in analyzing that is really trying to figure out, is the 10-year bond telling us that the economic data that's going to come out when the government reopens is going to be weaker than the market has priced in? And if that's the case, I think you'll see an overreaction and the market sell off. But to your point, that will be a great buying opportunity in our opinion, because we think that'll be the last flush out before we go ahead and make new highs going into year end and into next year for the first quarter. So short term, just not being very aggressive with buys right now.
You believe that the housing stocks are going to surprise to the upside next year? Okay, what's your play? What's your housing play?
So XHB is how we would play that, and right now technically it's been weak. But when we look out to the first quarter, that's an area that we think is a contrarian play that can really surprise to the upside. The Trump administration has been very clear. They are going to get housing back. And one thing with this administration, whether you agree with what they do or not, is when they say they're going to do something, they will do it. And you can make money off of that. So we're going to start a position there and increase that position as we go into year end. And that's where we think we'll see a surprise to the upside next year.
One more, the financials. I think you like them. And I believe you use XLF to play them, right?
That is one of ways we play it, and this is a play on deregulation. They're going to be lowering reserve rates, in our opinion, for reserve requirements, for banks to get housing going. That will increase lending, and we think the economy is going to boom in the first quarter, and people have underestimated the growth projections. And in that environment, banks will do really well, and earnings so far that's come out today and yesterday has really supported that thesis. So banks, we think, are be a great way to broaden out your portfolio heading into what we think will be a very big year next year.
XLF, we'll watch it. Thanks so much indeed for joining us. We always appreciate it. And we'll see you again soon. Eddie Ghabour.